welcome to seventh weekly technical analyst webinar, and myself, my colleague Wael welcomes you. So today we are going to take a new topic, which is Fibonacci tools. So basically, a Fibonacci tool or Fibonacci analysis is basically one of the popular among any traders. So where they're able to get into a proper indication to get into the market, to find out the levels, find out the targets. Even it helps you to get into a re-entry into the markets. So let's move on by one. So purely like to get into the Fibonacci to understand how exactly the tools works. The first pure importance is that like Fibonacci sequence, because Fibonacci sequence is just a mathematical numbers, or you can say a where you need to understand how the numbers or ratio has been formulated in the Fibonacci levels. So here the Fibonacci sequence are found by the mathematicians Leandro Fibonacci, derived from a problem in his famous book like Liber Abacus. It's a book of Abacus. So the sequence starts as follow. Like you can see, there are n number of series there, like 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144, and this goes on. So to find out how exactly the sequence has been formed, it's very easy to know about it. It's say like, for example, if it's 0 plus 1, it gives you 1. For example, if it's 1 plus 1, it gives you 2. And again, 1 plus 2, next is 3. 2 plus 3 is 5. Exactly, the sequence follows in the same way of the formation, like 0 plus 1 formulas. So for example, if you take 3 plus 5, which is 8, which is 8 plus 13, which is 21. This is all exactly, it is a sequence has been designed to keeping on the top of on it. So next is like we have to find out how the Fibonacci ratio has been designed. So which is a very important thing, because each and every Fibonacci is numbers which has been derived, calculated on a different levels. So basically, when you're talking about the Fibonacci ratios, usually, or most of the traders usually have to look into ratios and try to find out how exactly the ratio has been designed. So a set of the tools based on the Fibonacci ratio. The ratio is very important because I'm going to show you how exactly the ratio has been calculated and how this has been embedded into the Fibonacci's tools. Like we are going to check it out in an MP4 platform, where how exactly it can be designed, how to plot your levels, or how to identify the things. So some key technicals are like elevated weight theory or harmonic patterns are heavily followed with the Fibonacci ratios. As I said, like it's a most wanted popular tool among the traders, because the Fibonacci retracement levels connect to 2 points that the traders use to get the relevant and typically a high point and the low point basically. So when you say the percentage level of the provided areas, the price you could stall or it may be reverse. So this is help you to continue with the markets, or it can continue with the trend, or it can give the breakout of the trend, or it can give you the reverse trend of the markets. So mostly the used ratios are like a 23.6%, or it can 38.2%, 50%, 61.8%, and 78.6%. So these are the tools could be not be relied on exclusively, but it's like assume the price will reverse after hitting the statistic Fibonacci levels. For example, when the market moves to 23% and can bounce back, and it can move to the next level of 38%, or it can be moved to 50%. But these are the important ratio levels which helps the traders to get into the market to identify which level the points has been going to correct it back, or it's going to bounce back. So the ratios are being calculated by dividing numbers of the sequence. As I said, like as mentioned, there are percentage levels are there. So you can see there is a 60.61, you can say 61.8%, which has been derived or maybe calculated by 35 by 55. For example, which is the 61.8%. For example, if you're looking for 61.79%, which is 55 by 89, the same way all the numbers of, I said, like 23%, or you can say 38.2%, or you can say 61%, which all be derived based on the sequence of the Fibonacci numbers, and it will be divided based on the following numbers, and which gives the result of the ratio. So here the best part is that important to notify that the Fibonacci has a different type of indication which gives in the markets, a different way of categories gives the markets. One is like Fibonacci retracement, Fibonacci extension, or you can say Fibonacci expansions. So many are going to come up. So let's move on to the one or two here, and like Fibonacci retracements here. Fibonacci levels are the fixed numbers that can be used by the trader as a point of support and resistance. The main important point is that the trader used to keep the levels as majorly as a support and resistance levels. For example, if the market touched 23% or 31%, it's like it looks a major support level. So they get a chance to bounce back. So they take advantage, they take opportunity to get into the market back again, to enter the market on the direction of the markets. If, for example, market is a bullish trend, and there is a slight correction which has come to the level of 23%, definitely there are a chance to buy back again. So mainly the traders looks into the major support and resistance levels as they keep on tracking. Mostly any traders who wish to follow the support or resistance. Once you're familiar with applying the Fibonacci tools, it's very easy to detect the level. That's most important thing. So basic important things, you have to understand the entire Fibonacci formula, how exactly it works. What the purpose of using this Fibonacci retracement? What is the purpose of using this, especially the tools? How is it going to help you to understand? So if you understand a major a functionality or the functionality or feature of the exact Fibonacci tools, definitely is easy to understand how the market exactly moves on a directed levels of moves. So retracement occurs when the market is moving in a certain trend and goes on a corrective way. As I said, that's what the market keeps on one direction, and there's a small correction or any type of consolidation on the downside, or maybe market in the downside direction and gives some bounce back. So which will give us a corrective way to get in the market. A trader could use retracement tool to check the possible levels of continuation. So retracement is completely it's a continue of the market. For example, markets in the bullish trend, and after a certain move, the market you start giving some small correction. Maybe we can say the different levels like 23% or any type of the percentage, and market that are bounced back again. So this says that market is going to be on a continuation direction. So when the price poised to break high or low, the trader could use extension tool or set. It's very important on trendy markets, because whenever the markets are breaking high levels, or the breaking new high levels, that means already a fixed point to the high, and markets try to break that level, is going to get a new level of the targets. So obviously, this is a very important Fibonacci tools where you can try to find out the entry level, as well as you can also fix your targets, extend your targets further. Moreover, this levels also some traders used to keep their stop loss. So these are the major, because the most important thing any traders like to get into this important point, like entry level, the targets and the stop loss. So this gives exactly a clear information about the trend, as well as get into the market on a different opportunity to get in the different levels. So what happened up, my colleague going to give you a brief explanation about the other tools, as well as going to do some more demonstrations on a MP4 platform, which gives you more information about it. Thank you.
Hello, everyone, and thank you. So as I was mentioning, the Fibonacci retracements and extensions, they can support you in order to set your entry levels or your targets. So we're going to move to expansion, but first, ahead of moving to expansion, I'm just going to explain to you on the with the drawing how retracements and extensions work, and the expansion. So for example, the market, we know that the markets move in certain waves. So the trend consists of a series of waves with higher highs and higher lows. So if the market is going up, you know that the market is posting higher highs and higher lows. So since we have a trend, we have usually an impulsive move and we have a corrective move. So if a trader wants to anticipate where to come into where to jump in the market to continue with the trend, they would be using the Fibonacci retracement tools in order to check the levels that could be support levels, or the buying power could be there to support the market to continue the previous trend. So for example, if we're trading gold and the market here just rallied from 1900 to 1910, I know that the market, or I have an anticipation that the market is going to continue to the upside. But where can I enter or join the upside, the uptrend? So a trader would use the Fibonacci retracement level in order to check the levels where buyers could be waiting to jump into the next trade and join the trend. So if we just draw the Fibonacci retracement from point A to point B, And then we have here the retracement levels, 23.6, 38.2, 50%, etc. These levels, they will be accompanied with certain buying power that can push the market to the upside. So a trader would be entering in a trade near the Fibonacci level, and also he can use these levels in order to set the stop loss. So for example, if he entered at a level of 38.2, he can set a stop loss at 78.6 or at the beginning at the lowest point of the trend. So this is how we can use a retracement. Going forward on how to use extensions. So we know that if the market is going in an uptrend and we entered already in a position here and the market continued to move to the upside, how can I know where the market could be heading? So I can apply on the same wave here, I can apply the extension of the wave 1. So this is wave 1, this is corrective wave 2, and now I'm waiting for wave 3. So in order to know where wave 3 could end, I can just draw the extension, the Fibonacci extension on the first wave from point A to point B. And then here I'm gonna have the extension levels 1.236, 1.382, 1.618. So I could start just setting proper targets where the market could be heading, or where the next reversal point, or the coming corrective wave could come in. So by this chart here, I was able to draw the Fibonacci retracement and extension. The Fibonacci retracement, I used it to decide on my entry point, my stop loss, and the target was set by the Fibonacci extension. So this is just a clear idea how to do it. I'm going to move at the end of the webinar. I'll demonstrate on the MetaTrader 4 with live example. So for the expansion, it's similar to extensions and retracement. But for expansion, I have to decide on 2 waves. So when I'm drawing the extension and retracement, I'm just taking from point A to B. So this is it, A and B. But to draw the expansion, I have to set A, B, and C. So I have to decide on the first wave, which is an impulsive wave, and on the second wave, which is a corrective wave. So by this way, I just draw the expansion from point A, B, and C. And then I have a projection where point D could end, or the third wave. So this is the third wave. And by using the first and second wavelength, I can predict where the third wave could end. So if you just to trade harmonic patterns or the similar pattern A, B, C, D, you can guess where could be the potential reversal zone by relying on expansions or the Fibonacci extension. So this is the Fibonacci expansion. I'm just also going to go over it on the MetaTrader 4, so don't worry about how to implement it on the chart. Now I'm going to move to Fibonacci Fan. So what we learned now is that we can set horizontal levels by drawing the Fibonacci retracement and extension. How about drawing these levels diagonally, so you can draw the fan? So for example, if the market is moving like this in a certain scenario, so I set, for example, the Fibonacci retracement on the whole move in order to check where the market could retrace. Similarly, I can do for the Fibonacci fan. I decide on point A, for example, and this is point B. I just draw the fan from this point to this point, and here I can have all the lines that will be the 23.6, 38.2, 50%, 61.8, and the rest of the levels will be diagonal levels. So the market can rely or trade on these levels like this and find support and resistance based on these levels. So this is how we can use the Fibonacci fan. It's just similar to the concept of Fibonacci retracement and extension, but for this time, it is diagonal levels and not just horizontal levels, the one that we used to. Moving to Fibonacci time zones. The Fibonacci time zone is used to just like draw certain certain vertical levels. So to rely only on the x-axis by only setting certain points or plotting a certain variable that is 2, 3, 5, 8, which is the sequence. Meaning that if a move is taking place from this point to this point, point A to point B, so I would draw the Fibonacci time zone from point A to point B where the market was going up, and then this tool will draw on the x-axis. It will draw the second line, the line labeled 2, the line labeled 3, the line labeled 5, and this will the drawing will matter on the x-axis. So each line would be adding like 0.618 on the x-axis, and this could hint where the next move could end. So for example, the market here went up, so and then here we start the correction. So this level, the number 2 that is drawn by Fibonacci time zone, could signal that this down move ended, and now maybe we can have a certain structure, a sideways move And this also level 3 could signal that the market here ended consolidation and it has to move to the upside, for example. So I'd be using the intervals drawn by the Fibonacci time zone in order to check how the market is trading, uptrend, downtrend, or sideways. This is how traders usually rely on the Fibonacci time zone. Now I'm gonna to demonstrate what I talked about on the MetaTrader 4 platform. This is the MP4 platform. It's very simple and it's very simple to use. So in order to check, for example, if you're just drawing the Fibonacci levels, so you can either click on the F here and then, for example, decide where the market could be heading, or draw a certain Fibonacci. This is how you can draw the Fibonacci easily. You just set certain levels, point A to point B, and draw. So if we go, for example, let's take gold into consideration, since gold is moving a lot on the day. So gold had a certain move. So the market was moving in an uptrend for the past week, and then we had this correction, and now the market is poised for a certain move, and now we're stuck in a consolidation. So a trader here who was waiting to join the uptrend, so if a trader here was thinking that this move here is an uptrend move, and now we've had the correction overnight and the market would continue to the upside, he would be using the Fibonacci retracement in order to check which levels he can enter on. So by using the Fibonacci, he can draw from point A to point B, and we can see that the market retraced exactly to the 61.8 level, and now moved from the 61.8 to the 23.6 level, and then moved back lower towards the 50% level. And now we're trading higher between 23.6 and 0%. So this is the retracement that took place. The market moved from almost 1860 towards 1916 and corrected towards 1883, which was 61.8 of the gains earned during the past week. And the market just during the past moved to the upside, or swing to the upside, and the market retraced here. So a trader would be looking to buy at the 61.8, for example, and setting a stop loss here or here and targeting different levels on the retracement, either inside the retracement, or he can set a certain extension in order to check where the market could be going. An extension could be drawn by this way. An extension, you can do it on the other side, and this is it. So a trader who is looking for a continuation or a break of this high, he would be using the extension in order to set the new highs. So the 1236 level, 123.6, is meaning that the market is moving additionally 23.6% of the move that occurred here. So the market is moving to a certain level. So this 1930, in order to check the validity of this level, I go back to the chart and check whether this 1930 level was a key level or not. And I can see that the 1930 here was a key resistance previously, and the market was respecting this level. So now I have to expect that if the Fibonacci retracement is coinciding with the previous resistance zone, it should be, this area should be a significant area for traders, where a break above it could lead to a further extension to it, for example, the 61.8 or 161.8 extension, while a disappointment or a failure here could lead to a retest to the 100%. So a trader in this area would do the following. So if a trader has a buying trade already, he would just, for example, I'm just gonna implement. So a trader, if let's say this area, this trading here wasn't there, so a trader was checking the market when the market was down or the market was retracing earlier, so he would have, for example, set a buy limit order at 1883, for example, the 61.8. This is a buy limit, and his take profit, it could be the 1930 level, the level that we got through Fibonacci extension, and the stop loss could either be the 23.6, for example, 1873, or it could be the lowest point, which is 1859. So by this way, a trader would be setting a trade that has an expected return more than the expected risk. So you can see here, I'm risking this much, but I'm earning this much if it was correct, if my trade was correct. So I can see here this buy limit in the market, and if it was ahead of this correction, a trader would have now holding a trade from 1883 and targeting 1930 with a stop loss at 1859. So this is how it's simple, just to show the Fibonacci extension and retracement and to use them to set your trade. Now I'm just going to demonstrate also how to use the Fibonacci expansion. You can go to Insert, Fibonacci Expansion. So by drawing the retracement and the extension, I only use point A and B. While here I'm using point A to point B, and then I'm going down also to to point C. So I highlighted 1, 2, and 3 points, or the first wave, the impulsive wave, and the corrective wave. So the expansion would also give me a certain level or projection where the market could be going. So what does it mean to have FE100? It means FE100 means that the market from this point, the market is moving exactly 100% or the same move that took place here. So it's just copying the same wave, the wave 1, it's copying it from the bottom of wave 2 exactly to this. If we reach 61.8, it means that the market here is correcting exactly just 61.8 of this move. So this is a clear example about expansion. Now I'll draw the Fibonacci fan. Also similarly to these, the fan, you can go to Fibonacci, you can go for fan, and just go from point A to point B. So here you can see also how the 61.8, the market held at the 61.8 and corrected to the upside. Similarly, if you draw the Fibonacci retracement, so you can draw it here, you can see that these levels here, the combined levels, they are hinting for 38.2, 50%, 61.8. So if I draw a line from here to this point here, I would have also this line as the 78.7 or 76.8 or 78.6. It depends on the ratio that you're using. And on the upside, if you just, I'm going to go by this, by drawing this. So it's also the 23.6 level. So this is how the fan is drawn. And it's very simple to use. And it's signals are given similarly or traded similarly to the Fibonacci extension and retracement, but they are traded based on, like, for example, horizontal, diagonally and not horizontally. So the market can, for example, trade like this or fall here if the support was broken and trade near the resistance. So this is a demonstration on the Fibonacci fan, and I'm going to highlight now Fibonacci time zones. So also Fibonacci insert, you can set from point A to point B. So this is from point A to point B, you can see 0, 1. And now I'm just gonna look for the 2, 3, 5, and 8 levels. So these are the levels that, for example, a trader would expect that the market here had a certain move to the downside. For example, you would expect the market to move sideways here, and then, for example, to move down here or to move up, but within these intervals that were drawn by the Fibonacci time zone. So this is just what we have today about Fibonacci tools. If you have any questions, please write them down. Okay, so there's someone asking to repeat. What shall we repeat and precise? If it is the whole thing, you're gonna find you can find the rerun on our YouTube channel, ICM Capital. We will post the rerun. Okay, so when we use time zones, we can use the time zones when we were sure, like, for example, a move was taking place, and a directional move or sideways trading was taking place for a while. So, so by just using the time zones, I'm just projecting where the coming move could end, where the coming directional move or the coming consolidation move could end. Okay, so someone is asking whether we can draw the Fibonacci from the top to the upside. So on the MetaTrader 4 platform, so using the MetaTrader 4 platform, you just can click on the trade in order to see the retracements. If I'm looking for a retracement, I draw it from the bottom to the top. I can see this retracement, so I can see 23.6, 38.2, 50%, etc. If I want to go for extensions, I just draw it from the bottom to the top. So I go backwards. I can see where the market could be heading. Okay, so someone is also asking which time frame we can use, daily or 4 hour. You can use the Fibonacci retracement. You can apply it on different time frames, but definitely it's just relying mainly on the price itself. So you can see that the market is you're taking point A to point B, so you're taking the difference between the point A to point B, and you're just checking the retracements and the extensions of this size. So this size is just weighing on the y-axis and not on the x-axis. You can just draw between any directional moves in order to check where the market could be giving you a signal to join the trend or vice versa. But definitely when we're using higher time frames, usually for technical analysis, it's more solid. Fibonacci, the concept of Fibonacci, someone is asking, is it different when we use FIBO in stocks and CFD or forex trading, the concept of Fibonacci retracement is the same for all trading instruments. The concept behind it is that the market moves in a certain we know that the market moves in certain waves, impulsive waves and corrective waves. And when we're doing so, we're just using the Fibonacci retracement and extension to get entry points and set the targets. So this can be applied on different trading instruments relative what they are. Okay, so everyone who's asking for repetition or rerun, we can have just like the rerun will be available on our YouTube channel tomorrow morning. So you can check ICM Capital YouTube and you can have the final today's webinar. And also most of our webinars are there on the educational playlist. And you can find also for the week ahead, if you're just looking for a week ahead or market update, also they're available in certain playlists. Now, when you're checking for retracements, when the market is going up, you're drawing from the bottom to the top point, as I suggested. But when the market is when you're looking for extensions and where the market is heading to higher levels or lower levels in the trade, you just do it the other way around. Yeah, true. We have also a Telegram group where we're posting everything related to fast market updates, economic indicators, like any changes on the elections that are taking place today. They are all posted on Telegram since it's the fastest to reach you. Okay, so someone's asking whether we can also draw the FIBO on the line chart. It's similar. So if you just go here to the MetaTrader 4 platform, you're just checking the line chart. You can see that the difference is, for example, minimal. So let's say this is the time chart that we're using. So it's just going to differ if you're drawing the Fibonacci on the wicks. For example, I'm taking this wick to the upper wick to draw it. So by this you can see different levels. Then, for example, if I'm moving to this one, I'm just plotting another one from this point to this point. So I have these small changes in values because of since I'm changing my point A and point B, but it's also valid to use it on the line chart. So in order to join our social media platforms, on any email that you receive from ICM Capital, you can just click on any icon for the social media platform, and then you're just on the platform. You just subscribe to the platform. I'm just gonna dip here also the link to our YouTube channel so you can subscribe. So I just added to the section the link to join our ICM Capital YouTube channel. So also you can click on the notification bell, so you can notify when we're live and talking about different matters that are affecting the markets. Usually we're doing it at 11 GMT every day. It's a midday session. You're just recapping what's happening in the European session and just what to anticipate or what to look for in the coming US session. So this is it. If you have further questions, please write them down so we can support you. I'd just like to remind that all the information, news, analysis, and opinion mentioned in this webinar only serve for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument, and ICM doesn't provide any investment advice. Okay, perfect. I believe this is it for today. Thank you all for joining. Said, do you have to add anything?
Thank you, everyone.
Thank you all, and hopefully we're having next week also another educational webinar on Wednesday.